Yo, what to do? It's about Rise. Welcome to a new week. I'm about to make a recap for the week, and as you can see here, we got a loss on a setup that we took that I saw was a very good potential, and according to my books, it was a high quality setup. So let's go through why this got a loss, and let's go through about why we even got interested on the trade. It was a 1 to 2. Price went and opposite side, but now it seems to keep on going. But let's see why we even entered. Here we can see that on the weekly I saw that price was bullish. We made here a coming from down here. Price was like having bullish structure and shit. So we made here a high and high, high and low, high and high, and then now I think I was expecting price to like do this, you know. So I was selling this leg. So that was my anticipation. So another thing I saw was that there was a head and shoulders here. Price went bullish on its impulse, made this leg, the head and the right shoulder, came down, retested the neckline here, and then that was my other confirmation of I bet we're gonna be selling re deep. So now I had my bias, and let's see if I saw some in the monthly. Yes, also in the monthly I saw that we had a major engulfing candle that engulfed like 4 months in a row. Only 1 month engulfed 4 months. So four full months. So that was a bias that got me a confirmation of that there was a lot of supply pressuring around this area. So price was also on a basically premium on the weekly. So at this low all the way to the impulse, the high, we can see that we're above the 50% right here. So always when we're above the 50%, it means on the bullish trend we are premium. So we wanna therefore sell always when we are in premium. So once I saw all this, my bias got clear that I wanted to sell. So waiting for the setup, I tried to see where the daily was in structure, if it was bullish or bearish. So I went here, I saw the high, the low, the high, the low, the high, and then here from nowhere price went boom, low and low. I was from bullish here, and then here we went bearish. So I went into my 4 hour to my fib, mark out my key levels where I wanted to see price to retest. I found my lowest zone here, so put it like this. My lowest zone was right here, and then we had my medium zone at this area, which was basically the neckline of the head and shoulders, and then was a upper zone above here. So price retested, went up all the way to like 80%, and then from here reacted with a engulfing here in the daily, reacted here with engulfing. So that got my interest on price, that okay, price is starting to form and wants to sell. So price melted, went a little bit down, so I went into the 4 hour. Now my other rule is to have the 4 hour in line now. So I saw the 4 hour being bearish, went here, made a high and high. This was this high and high, high and low, high and high, and then from here was making its low and low, boom. So this is the low and high, now this is the low and low, boom, here. So yeah, so now price was like yeah, so like now we wanted to see price to retest a key level. So I marked my fib, wanted the 4 hour to have its retest, and we retested this medium zone right here on the 4 hour. Boom. So that got my interest. So now we retested with the body. We've tapped into the key level, and then here I wanted price to be in minimum. My requirement is to be in minimum to premium levels. Always, if I want to sell, I always expect price to be in minimum to premium levels, time frame levels. So basically what I mean is higher time frame levels is basically I use the weekly, daily, 4 hour as my higher time frames. So basically it's either one of those three. We gotta have at minimum 2 out of those 3 time frames. We have to have 2 time frames where price is at premium. So at this case, this scenario, we had, as said, the weekly here being in the premium, and then we had the daily, I think it was daily. We've retested, yeah, we retested the premium. We came here, tapped in, went out, but here I was quite well. We were here in premium also, because we were always now here above the 50%. Then we are in premium. So this key level was basically on a daily premium because we are above the 50%. And then went also into the 4 hour, and obviously we were bearish. We found the key level into the 4 hour. Our 4 hour was a 60% zone, and then which means above 50 we are premium also. So now we have daily, we have weekly, we have daily, we have weekly, daily, and 4 hour in premium. So now we have all of our 3 time frames, high time frames, are in premium. So now what I waited for was price to give me some kind of indecision, that basically when price reaches a key level, I always wait for price to like show some indecision slash the momentum towards the key level. Basically when it retests, now here it broke. Now when it's about to retest, I want price to show indecision slash momentum is stopping price to keep on going, basically, because I don't want to take now price when, for example, let's say price is breaking here very very sharply, okay, and then now when it's about to retest, it retests with like a falling knife, a basically very very high momentum, basically retest. So I don't want to be the guy that just enters and put my entry here and my stop loss somewhere and then hope that price should just keep going down. No, I want to see that price is reaching this key level, and then it has something that's stopping it to keep on going to this next key level up here to this blue one. And that's my sign, is that price should give me some kind of indecision and momentum slow down. It's basically signifies that price is having a force to not keep going. And then I have my low time frame confirmations, and then I will sell, and then I see this, boom, this is my entry. That's okay. Because why is it stopping? Is because sellers are in pressure, like in control over the buyers. So buyers cannot therefore go to this next key level up here. So that's my confirmation, my next confirmation. So as we see here, the 4 hour, we got into a slightly kind of indecision price here. Okay, so that's a good one. So now I waited for some liquidity to be taken always before my entry, where I can place my stop loss above that liquidity. And here we did take liquidity. This was a liquidity high. It was London, New York something, yeah, New York high. This was London, New York high. On the 4-hour, we do see that we reacted with this candle, this bearish candle right here. We reacted with this bearish candle right here, as we can see here, this whole bearish candle right here. So this is very, 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 very high in supply. It's a strong basically candle, so I saw that as being liquid. So I went in and wanted to some more detailed into the 1 hour and saw which kind of session it was, and it was the Asia. We can see here it engulfs this candle, and it's Asia also. So what I saw was that I saw it as many would be interested in putting the stop loss above this, because now it's an engulfing, and other will be trying to sell to the downside. So therefore this is a liquid high. They put the stop loss always above a structure and a high, so in this case it will be here. So therefore it was a liquidity. Price came here and took this liquidity here, boom. So that was my confirmation. I said, alright, now we've taken liquidity. So now my next one is I need a low time frame to be pairing with my direction. So now I have the 1 hour right here. I need the now I need the 1 hour to be how you say it, to be in line. So here we have, let's go into, yeah, here's the 1 hour. So here we had basically here the low and high. All this was a low and low, right? And then from nowhere we came up here, took this liquidity, boom. But it's not an high and high. In order for us to become an high and high, price always, a market structure shifting basically is basically when price has to break above its previous high and low with its body, not with wick. With wick, breaking with a wick is not a chain of character. It's not a break of structure. It's not a market structure shift. In order for it to become a market structure shift, we have to break with the body being closed above the high or the low, depending on if we're bullish or bearish. In this case we're bearish, this is the low and high right here. This is the low and high. So we need to break above with momentum. Also is another key point, is we need to break above with momentum and displacement, and then close above it's high. Otherwise, if basically price does like this, let's say this is the high and high, and price does like this only with it closes with the body, but just a little bit like this, not high. I don't see that as a break of structure, because if it has to break, it's an indecisive break of structure. I don't like that. I want price to be a decisive break of structure. That means that buyers are, in this case, buyers are strongly showing themselves that we are in control of price now, that is going to go bearish. We are not basically onshore. We are stronger than sellers, and we are going to take price to the upside. And that's the way of us showing that we're going to break with strong candle to the upside. That's a momentum break, not an indecisive small candle, bullish candle, and it stops and then you say that's an high. No, we have to break with strong displacement and momentum. So let's say here we broke here. So let's just put this as a chain of character. We broke here, high and high. This is a high and high now. So this is the high and low. So now we broke. We can see here price is breaking with momentum. From here it broke up with the momentum and displacement. So I saw that as a high and high. That's what I bet. So now we're bullish on the 4 hour and on the 1 hour. Bearish on the 4 hour, bearish on the daily. We need 1 hour to be daily, to be bearish. So what did I see? Now we went here, we go this low and low, low and high, this low, and then made this an high and high. So now we're bullish because we broke this high. Now we want price to become bearish, and price did break this low again after taking the liquidity straight after, made a low and low, low and high, low and low, low and high, low and low. So I would have taken my entry here. I think I did not take it because of it was late Friday. Yes, because this was a late Friday. I don't take my entries during like New York close. This was around the New York close. So post post New York session. I don't take my entries on New York when New York is basically about to close, especially on Fridays when the weekend is about to come. So I did not take. I wait for the whole Monday to come, and then we opened here on Monday during the directly on Monday London session. Here I entered. So what did I do? I waited for here a 4-hour engulfing, not engulfing, but a explosive candle. This is an explosive. This is called a explosive candle. So I put my entry here, and then I had my stop loss here above, approximately 10 pips. So I had it 10 pips above this high, this swing high, 10 pips, always minimum 10 pips, my rule. And then aimed for the 1 to 2 all the way down here, and a 1 to 2. So now we have the 1 hour. Now we have the weekly in premium, daily in premium, 4 hour in premium, and also next we have the daily being bearish, the 4 hour being bearish, and then also we have the 1 hour right now, which is the lower time frame, is also being bearish. This gives us a sign that okay, the higher time frame is showing that they want to go down, and the lower time frame is now correcting. It's correlating with the high time frame structural bias. That gives us a sign that okay, we're interested on selling now. So I had my stop loss over this liquidity and aimed for a 1 to 2. So what happened? As you can see here, price made here. So this was not the high and high on the 1 hour, low and low, low and high, low and low, low and high, and then we had a low and low on the 1 hour. So now we see here price is being bearish on the 1 hour. So we went a little bit on profit, blah blah blah, just like a half pip, a half hour, and then from nowhere started to go draw down, and then directly like fucked us up and went straight bullish, and then now it's gone bearish again. You see, so like we broke this high. This was the high and high on the 1 hour. You see here, this was the high and high on the 1 hour. We broke this high again, basically a chain of character. Basically here a chain of character, and then we went high and high, high and low, high and high, and then from high and high we went again low and low, low and high. So we went from bullish, no, here first we went bearish here, we went bullish here, we went bearish here, we went bullish here. Now again we've gone bearish again on that one. So, and also another rule, the last rule also is also that we always have to be always above or below the EMA. In this case we're selling, we have to be below the EMA. So these are the EMAs. We always have to be below the EMAs, so in which we were. So I had my stop loss above, that gave me a sign, and then I sold, and then price went up and took me out, and then now it seems to come back to my entry, and it seems that it wants to come down. So I don't know, but what I think this is basically, it was a setup by institutional setup, or like inducement. It was an institutional setup / inducement setup, because I think this was a kind of trade where the institutions basically wanted to enter the orders. I think basically price came here, and then here, this was Friday. Now when price reached this 4 hour key level, it was Friday. So I think when price was about to go right here, it was Friday, and right now we opened here on Monday. I think they might say like, we need price, or maybe they entered the orders, but majority of the orders did not get placed because of the weekend or something happened. Maybe, I'm not saying it was the reason, but it might be, and they did not enter the order. So now price went down. They say, shit, our order did not fill. We thought all of our orders were filled, so shit, we need our orders to get filled, so let us buy price up so that we can re-enter in all of our orders, and then we can come down back with price. So they pushed price up, they bought price, to the upside, and then now here they entered all their orders, then now they sold. Boom. So basically what I think is they did basically, let's say low key in a way the same as me, my entry. Let's say this was their entry. I think they had a stop loss here first. At first they had a stop loss here, but now when the Monday came in, Monday opened, they say shit, our orders are not entered. They say we need to have price to get up so that we can enter all of our orders. The remaining orders are not filled. So these orders that we got executed on Friday, I think they trailed the stop losses to like up here maybe, and then once price reached here, they entered a new one. They entered here a new one, and then they put the stop loss like this, and then now they're aiming down like this, something like this, something like this. I don't know, but this is something I just have a feeling that this was kind of what they did. So now I think like price is about to like do this. Now it's broken. I think it's about to retest, and then they might like maybe scaling to another position here. Boom, like this. I think they might scale in, take some liquidity maybe, and then they will keep on selling. So they sold here. Maybe now when price went up here, you know, they closed their trades on break even, and then now they re-entered there. So maybe they did not put their stop loss up here. You know, like wait, they did not here. Wait, right here. If we go back, they did not put their stop loss all the way up there. Let's say they did close all their orders here at break even, and then they let price keep going up, the bought price, and then they enter the position here, and then they said, alright, now we're gonna sell, we're gonna go big. Boom. So now they're basically in the positions, stop loss above. Maybe they have their positions above this liquidity in case something happen, and then now they're about to sell. This is what I think. So I think price is about to like retest here and then keep on going and pushing. So therefore I'm still waiting to be interested in this price and waiting for some like this to be happening, hopefully next week or something, but we'll see. So this was my bias. I think it was still a quality way of like pre-looking the market and everything. So according to my rules and everything, this was a quality setup. Nothing was like not according to plan. So yeah, so this was it. And I was also wanted to mention another thing was another thing I wanted to take into this video was you know, these kind of scenarios also for people that do not know is that trading is a very unexpected game, and it's a very high performance based business game. So like not every day, every time, every month you're going to have a green month, you're going to win. Losing periods are going to happen, and people like you're going to lose, you're going to win. Like even the best traders, even the institutions, the big money, the big guys, they lose trades. They have sometimes red months. Like majority, according to stats, those kind of players, the big players, institutional banks, they make like less than 10% a year annually on their like ROI type shit. Less than 10 fucking percent, bro. So these folks ain't making like 100, 200, 300, 400, 500x on their money. Like they're making like 10% annually in return. That's it. So they trade so little and they take so quality setups. So like it's crazy. So they obviously they lose and everyone loses. So loss is just a cost of the business in trading. So it's not the whole world, but as long as you have a strategy, you know what you're doing. Like, you know, don't take it as, you know, every setup, you know, don't take it basically as a gambling, but you treat it as a business. It will become a business. It will become serious. You will develop and become good. So basically, like having the expectation every day, every month that I'm going to end up green. I want to, obviously everyone wants to end up green being a trader, which is the ultimate goal, but you're not, sorry to say, but you're not going to end up green every fucking single month. That's not how it's going to go. The game ain't like that. So like sometimes you're going to be a red month, sometimes you're going to be green month, sometimes you're going to be, I don't know, break even. So therefore you have to according your risk very very well to how you're performing and how you're the way type of trader you are. You gotta know the type of trader you are. Are you a trader that wants to always risk high? You're aiming maybe for low risk reward because you're risking high, or you're always risking for high risk to reward? Or are you taking a lot of trades in quantity? Maybe your scalper, you're always taking like 5, 6, 7, 10 trades a week. Maybe being high risk trader is not your deal, because you're risking a lot. By risking high, you're gonna lose fast because you're taking a lot. But if you're taking less trades, then you can be that guy that says, I might risk high because I'm not even taking much. Maybe I'm taking 3, 4, 5, 6, 7, 6 trades a whole month. Then you can be that guy that says, I'm gonna be risking high. But not being a scalper, say in a funded account, I'm gonna risk 3, 4, 5% on a funded. No, never in a funded 3, 4, 5. Funded is like max 1 to 2%. But the majority thing I wanna say is being detached to your expectations and results. Be more attached to inputs, like what it takes to let's say for example you want to make 2% a month. What do it take to get that 2%? I bet you gotta be locked in, you gotta be focused, you gotta have a good health, good meals, sleep, eat, train, go to the gym, do all of kind of stuff. When you do those kind of stuff, you're gonna be thinking very clearly. But if you're like not doing things and basically you're not journaling, you're not okay. For example, you lost a trade, but did you go back to your trade and look, why did I lose? Why could I learn of it? If I could not learn anything of it, I follow my plan. At least you're aware of that, or you are aware of that. You follow your plan, but you gotta basically look look like every trade you take, go through them and say what did happen, what could I have done differently. That's a way of basically you're doing shit every day. So being basically detachment, like the law of detachment as it says, is like basically being detached from outputs, only be attached to inputs. Basically, an inputs is what does it take to get to that output goal. Your output is making 2% a month. Then your input is maybe following your rules, you're backtesting, you're doing this and that, eating well, sleeping well. That's an input, because by doing that it will lead you to making 2% a month consistently. So you gotta have that. So think more about, okay, every day I gotta do this, you stay to your shit, you lock in, and instead of thinking I want to make 2%, because you don't want to be that guy that says, I want to make 2%. You're so output focused, that will lead you to, now if you're expecting 2% every month, and then let's say you're in the last week, you're down 5% in your accounts, you want to make 2% because you haven't paid your bills and everything. Now you're forcing trades, you're taking bad setup, you're losing, even you lost all your account at the end of the month, it's going to be bad. So therefore, instead, think, what can I do every day to improve, to ultimately reach that goal of reaching 2% a month? Am I stay locked in? Am I doing this, doing that? Yes, then that's the point. So that's what I just wanted to say, and to keep it short, is being detached from results and being detached from outputs and more attached to inputs. So do every day, backtest. Can I do every day? I can backtest, I can journal, I can read, I can go on a walk, I can go to the gym, I can eat healthy, I can listen to podcasts, I can those things that that fuels your mindset, because everything in trading is basically your mind. You're not using anything physically, you're not even going out, you just need you and yourself in a computer. It's only you and you, it's not you and anyone else, only you and you. So you need to have a sharp mind. So that's my thing I wanted to take up, is being detached to output performances. And because when you do the inputs, the outputs will come. When you do every day what it requires to do, you will get what you want at the end, which is the results of making, for example, let's say for instance, you want to make 2%, you will make 2%. If you do what it takes to do every single day in consistency, you will get whatever you want. So the law of detachment, if anyone don't know, my advice is look it up, try to learn about it, and your life will surely improve usually. So that's about it for this week 3. See you for next week. It's a boy